I'm sure everyone knows, and probably ruse, the tax filing deadline is rapidly approaching. With me today to talk about how you can avoid ending up in the IRS's sights and what to do if you do is Scott Estill. He's a former IRS trial attorney and author of Tax This, Standing Up Against the IRS. Scott, welcome.
Well, thank you very much for having me.
Scott, I think it's fair to say that nobody relishes the idea of getting into a scrap with the IRS. And so I think for most people, the most important thing is to try to avoid getting into that position in the first place. So what are the sorts of things that will trigger an IRS tax audit? What are the red flags that get the IRS's attention?
Well, first of all, you can't avoid an IRS audit if you file a return just because the IRS does do a lot of random audits. But they also look at specific items that may, like you mentioned, trigger an audit. One of the things that they look at is that information that's reported to the IRS, such as W-2 information, 1099, things like that. If you don't report the exact same amounts that are reported to the IRS, an audit will generate. But they also look at statistics too, so that if you're in a particular business or if you have a rental property and your deductions are considerably higher than what they consider to be the norm for that industry, that will generate an audit as well. But that's really what the IRS is looking at, and along with any particular projects that they may be working on. The big one right now is offshore income, so anybody with offshore bank accounts has a much higher rate of audit right now.
Well, given that, what can you do to avoid your chances of being audited? Or, barring that, what can you do to make sure that your return will stand up if you are singled out by the IRS?
The first thing you want to do is understand as much as you can about the tax laws, at least those laws that apply to you, or your business or your family. And then I think you also want to make sure that you have documentation for every deduction that you take on your tax return. So that seems to be the real key part. And when I've walked into audits for taxpayers, I've had no problems when I've had all the documentation. When the IRS sees that, they see that we have the documentation for everything. Typically that audit goes very quickly because they want to move on to the next person, and the next person may not be so fortunate with their record keeping.
In your experience, is there one mistake that people commonly make when they're dealing with the IRS, and something that they definitely should not do that will not help their case?
Well, I think there's a couple of mistakes that they do, but I think the first thing is that a lot of people will go in and try to fight the IRS on their own, and that's very difficult if you don't have an understanding either as to the tax laws themselves or to how the IRS operates. I think that's number one. But if you are going to go in and deal with the IRS, maybe it's a small issue or maybe you do have the confidence or the records to back up your position, I think the major problem with a lot of folks is that they end up talking too much to the IRS. They give the IRS too much information, and by doing so, they may close the door on one issue, but by saying a few things, they may open up another issue that the IRS wasn't going to get into or maybe even didn't know about. So it gets real difficult into knowing how to reply to the IRS, to give them the documents or maybe the testimony, the oral testimony that the IRS may be looking for if you don't do this for a living. And I think that's really the number one handicap that most taxpayers have when dealing with such a massive bureaucracy like the IRS.